if there is no liquidity in any zone that is your POI, that place 90% of the time doesn't hold. Hi lovelies, welcome to my YouTube channel. It's a baby girl Pepiana, aka it's a baby girl Perpetual, aka Pepiana. So in today's video, it's going to literally be a vlog. I'm just going to do a few house chores, then after that I think I might go to the gym. Then I'm going to equally show you guys pairs that I've analyzed. So it's actually Friday, so there's nothing much to do today, but then there are pairs I analyzed which I'm waiting for them to get to my zone. I'm going to show you guys that and why I am waiting for that zone. So hope you have fun watching this, guys.
It's around 8 a.m. in the morning and I'm starting off my day with doing the dishes, as you guys can see. So yeah, once I'm done tidying up the kitchen, I think I want to make breakfast. Then after that, I'll be going straight to the chat to analyze with you guys. Hope you guys enjoy watching this video. Don't forget to subscribe, like, and give this video a thumbs up. Drop a comment too. Yeah.
Do you guys know what this is? This is coco, account. It's called account in Igbo. Okay, Yoruba. English. Cap in English. So guys, I'm just going to show you guys the pair I analyzed. I maybe analyze one or two. I'm not so sure. So let me start off with screen recording. Why is this network acting up? I don't know, my network is giving me issue. I'm filming this video with my phone and I connected my phone hotspot to the laptop because that's what I use. I used to have MTN MiFi, but God, stop using it. But either way, let me continue with screen recording. But to be very sincere with you guys, I hardly analyze on my laptop. I use more of my phone. Like I hardly use my laptop. So looking at this pair now, I'm going to start off with gold. Gold is one of my favorite pairs. I think I've mentioned that before. So this is 15 minutes time frame. Let me take it to 1 hour time frame. So looking at this pair now, this is gold and this is gold on the 50. Okay, this is on the 1 hour time frame. This is on the 1 hour time frame. You guys can see over here I drew out this line. This is my point of interest. Maybe some of you might be used to using box. I didn't use the box. I just used a line because I just love my charts being very simple. I don't like too much, too much drawing and all of that. But I think I might use a box to draw it out for you guys, for you to see. So let me get to why I picked out this point as my point of interest. So yeah, if you look at this place, let me get if you look at this place now where this plus sign is, right, this place actually did a liquidity sweep, like swept this zone. It's not clear because this is 1 hour, but if you go down to like 30 minutes, 15 minutes, you will see it's more clear. But I'm going to go down to that. So this place, like here, it did like wanted to come down, then this place broke out, that did a liquidity sweep to this side. Then this is structural liquidity. Let me mark it out for you guys. This is another liquidity. Okay, this is another liquidity. I'm going to make a video explaining how I analyze and explaining some SMC strategy for you guys, right? But for this video, I'm just going to tell you about why I picked out this part as my point of interest here. So, and currently we can see that the market is moving towards my point of interest. Are you seeing it? The market is moving towards my point of interest, and I have placed a sell limit on my demo account. I actually placed a sell limit on my live account. You know, I funded a $10 that I wanted to use to trade CPI. If you watch my last vlog, but I couldn't trade the CPI again, so I used my live account. But I didn't know I used my live account, but I later found out. I quickly closed it and I went to my demo account and placed this trade on sell limit. And some people call sell limit aggressive entry, right? Aggressive entry. I actually prefer that somehow, because most of the times when the market touches your zone, it doesn't come back to it. Only fewer times does it come back to that your point of interest. I have noticed that with the market. So if you are okay with the market touching your point of interest and moving away from it, and you re-enter, then you can use the market option. But for a newbie, I would advise, please do not use sell limits. Use market order, so that you'll be sure before entering. Sell limits is mainly for advanced trader, though I am not advanced yet, but I just like it, right? So yeah, let me go back to what I was saying. You see what the market is doing? The market is doing like it is, you know, doing a little retracement. Okay, maybe you guys cannot. Let me zoom out so you guys can see what this candlestick is doing here. It is just coming down a little. It's got to this zone. For me, this is liquidity. Why do I call this liquidity? Because it is close to the main point of interest. The market always moves to anywhere that there is liquidity. If there is no liquidity in any zone that is your POI, that place 90% of the time doesn't hold, right? 90% of the time it doesn't hold. Though the market does anything it wants to do. Like yesterday, I did some analysis. The market still hits me out. Let me go to 30 minutes for you guys. So now in 30 minutes, you're seeing how this is looking. I have to bring it closer so you guys can see. Back to what I was saying, why I marked out this one as my POI. Okay, markets swept out this zone. Market swept out here. This place ranged a bit and market swept it out, you know, and gave this BOS, cleared the liquidity. Though normally I am more comfortable picking out a zone when market sweeps it out with like a week. For me, that is kind of more valid. Though this too is good, right? But then let's see how it plays out. I don't know. Like I said, I'm still a beginner trader, so I'm still practicing and all of that. So market swept out this zone I marked out for you guys. Then it came down. The market came again, rekissed the FVG. Are you seeing this zone? Markets just kissed the FVG and kept selling. So why I picked out here as my point of interest, right? There was a BOS, there was a liquidity sweep, and there is liquidity that the market is going to take out to continue to sell for a bit and maybe keep buying, right? So now there's another thing I want to talk about here. The market is not owned by us or by our relative or by our family member, right? So that's the reason why we need to always set a realistic take profit. If you look at this is my analysis here. If you look at my analysis, this is a 1:5 RR, right? This is 1:5 risk to reward. So you guys should just forget about these pips you are saying. I will make a video later on how to calculate pips, right? Then and again, how gold pips is being calculated is different, how BTC pips is being calculated is different. I'll make a separate video for that, right? So my risk to reward on this trade is 1:5. Okay, on a normal it's supposed to be 1:3, but I want to make my trades a 1:5 risk to reward. But then if my trade gets to 1:3 and I see the market is about to reverse, I close it on 1:3, right? Let me tell you, before this trade was on like this, I think it was down. Okay, is it somewhere here? Yeah, so somewhere here, that was my TP. But then I asked myself, let me be realistic. This market can get to this place now, sell to this point and start reversing. This market can get here and start reversing. We do not control the markets. Then I told myself, let me set a realistic goal or a realistic TP, and that realistic TP is the 1:3 that 1:5 that I set. And this zone now looks like a possible zone that markets might come, you know, take order. Or here, this is another zone. Let me mark it out. This is another zone market is likely to come, and market is likely to come here and pick order. Why? Because it is a strong supply zone and it has FVG. It has FVG, right? It has FVG, and there is liquidity here. There is liquidity here. This is kind of liquidity. If you go down, this too, here too is liquidity. Like I said, the market moves to where there is liquidity and where there is order. What is liquidity? Liquidity is money. Liquidity is the money, right? So there's liquidity, there's liquidity here. Let me go down to a lower time frame again. Let me go down to 15 minutes. So have you guys seen? Okay, this place I first marked out as liquidity. This first zone, I told you guys that there is liquidity. Like you guys see, market ranged here. This was a range, then it did a BOS. It broke out of the range, came down small a little, broke, kept on. So this is the main zone where there is liquidity. So it's very possible market to come, you know, take out the liquidity here, possibly come here, take order, but then we do not own the market. So the market does whatsoever it likes. Yours is to tell a story by looking at the chart and predict, right? So and if you guys are seeing this other zone I marked out for a buy, right? And you guys might be wondering, why did I pick this zone? Let me explain to you guys why I marked out this zone as a buy zone, right? So yeah, right, so the market came here, sold a little, right? Then as you can see, pushed up. Instead of the market to keep pushing up, what did the market do? The market now came, swept this zone with a wick, right? I'm still going to delete this so you guys can see it clearly. The market now swept that place with a wick. Then after sweeping the place with a wick, it now did a BOS, broke that zone, broke a structure, then came down, gave us structural liquidity, and then bought massively. Are you guys seeing? Bought massively. This is what the market did, right? Are you guys seeing that? Okay, hope you guys understand what I explained. You don't really need to really understand it on this video. I will explain it on another video. So let me delete these things I marked out before. And remark them for you guys. I'm trying to be quick before my phone disconnects again. So yeah, no, let me delete this too. Okay, Shimo. So yeah, this is a liquidity sweep, and this is with a wick. So to me, I have more confidence in this, right? Then this is a BOS. The market gave a BOS. The market gave a clear BOS. A clear BOS. Then there is structural liquidity here. This is liquidity. People order are here, and this place is a place that will lure people, right? This place is a place that will lure people. Some people might think that market will get here and reverse. So some people will place their order here, and some people have placed their order here before. So market's coming down now. Why I feel here is very valid is because market will take out this liquidity, right? Then now come to this place and pick up orders that are here to buy. So that's why I feel this is a high value zone, and this is a 1:6 trade. Let me try and be realistic, right? Bring it down to 1:5. I might leave this at 1:3, just a right. See, so have you guys seen? So if this comes, then my TP, so this is a 1:3 trade, right? If I am to get into this trade, but let us leave this aside because market has gone far from this zone, and let us focus on where I am expecting the market to get to right now. So now you see market is selling from here. Market is selling from here. Let me go to 30 minutes. You see the market has not gotten to even this. Has it gotten here? Okay. Oh, the market has not even gotten to where the structural liquidity is. All this you are seeing is inducement, right? Inducement. Some people will be lured into taking trades here, taking a sell trade here, and possibly they will now put their stop loss. Possibly they'll put their stop loss here, which is above this place that I call the structural liquidity, right? Then market to only come, take them out and kiss this my POI, then sell, right? So that is how market does. Market is always looking for zones where it can lure people, where it can take out your money, your liquidity, because that is what they want, and that's what the market needs to keep moving. So I've explained why I want to take this gold trade. So let me go to USDJPY. I think these are the two I will just narrate in this video. USDJPY. USDJPY. I use Oando. So let me go to 1 hour, and I always do a top-down analysis. I go from 1 day, sometimes 1 week safe, right? Sometimes 1 week is very necessary, so you know the direction of the market. So yeah. Oh, okay. So you guys can see, I'll just analyze it in this 1 hour time frame. I wouldn't go down to the lower time frame. The market is still very, very far from my zone. Why did I mark out this zone, right? Why did I mark out this zone? I marked out this zone, number one, this is a strong supply zone. As an SMC trader, you should understand this zone I marked out now. This zone I marked out now, this zone here, this zone is a strong supply zone. How do you know it's strong supply zone? Look at the candles that came, like it was straight, it was massive, like it's pierced, did a BOS, right? Now that is one. Then two, it has FVG, which is, or you call it imbalance, anyone you want to call it, it has FVG, right? Then the market still came down much later, gave us structural liquidity. This is another liquidity zone. The market came, tapped into this FVG for FVG traders, right? Tapped into this FVG, right? And kept on buying. So for me, this is structural liquidity, because some people might want to place their trades here. There are others here. So what I am expecting now, I am expecting the market to come down to this my POI. I'm expecting the market to come down to this my POI. Let me mark it out for you guys. I'm expecting the market to come down to this my POI, then buy. Now this is a 1:5 trade. Like I said, I want to set my trades to 1:5, but this is a 1:5 trade. And you know, like I said, market is all about patience. You have to be patient, you have to wait till when it gets to your zone. But before then, you can still look out for sell opportunities to this zone, since you know that this is where the market is trying to come down to, right? You can look out for sell opportunities, still looking out for the same thing you always look out for in the market whenever you come to the market every day. The same thing you look out for whenever you come to. If you see anything you look out for, fine, then you can take a trade. But if you don't see, because currently I'm not seeing any of my setup here, reason why I have not maybe analyzed any sell trade, like for it to sell down to my zone, but possibly it might create my own setup. Then I would. So, and one thing you should learn is I shouldn't force a trade. You shouldn't force a trade. If you do not see your setup, leave the market, go to another pair. You know, like I said earlier, at least have up to like 5 pairs, 5 to 6 pairs, right? Let's say five pairs that you know that okay, these are the pairs I always analyze. If you don't see your setup on this pair, move to the next pair. Check if you see your setup. If you don't see your setup there, move to the next pair. Just analyze them, mark out your zones, and leave them. Keep watching them, right? Instead of you jumping into trades that you are not sure of, or trades that have low probability, right? Though the market still does whatsoever it wants, but then again, you still have to always watch out for your setup. So if you are an SMC trader, ICT trader, liquidity trader, right, whichever kind of trader you are, is to just stick to your setup. And I know some people that have sold already from these zones and have made profit from it because they saw their setup there. Everyone has what they see whenever they come to the market. They have what they see that make them take trades, right? But if you do not see anything, if you are not seeing your setup, if you're not seeing anything play out, leave the market. What I might be seeing when I come to a chart, or the distinct story that I might be able to tell when I look at a chart, might be different or will be different most of the times from the story you are being able to tell when you look at a chart, right? You might come to this chart now and you'll be like, oh, this zone, I think there is liquidity in this zone. Let me mark out here. And I think that the markets will be going to this zone, right? It is because of that's how you analyze, that's how you interpret the market. Different traders, different trading strategy, different trading concepts, and all of that. So I think, yes, I have shown you guys these 2 pairs. I would have loved to analyze some other pairs, but no, I wouldn't want my phone to disconnect. So I'll be making more videos like this, showing you guys how I analyze charts and a lot, like showing you guys how I do my top-down analysis. So just stick with me, guys. Make sure you subscribe, make sure you like this video, make sure you drop a comment. So basically, these are some of the pairs that I analyze, and I am waiting for my zone. So aside from that, right, I think I'm going to go on with my day. I think it's time for me to go and eat. After eating, then I will hit the gym. So let's go, guys.
So yeah, currently I want to eat, but I know you guys will be wondering why is she using so much sugar. Okay, the thing is, this sugar is not sugaring. Like the sugar they sell in this area, I just don't know what kind of sugar it is. It's barely adds taste to what you use. Though some people would be okay with one, but I love my pap being tasty. So yeah, after taking this pap, I'm just going to go observe my trade. Remember I told you guys that I placed a sell limit on gold on my demo account. So once I'm done eating, I'm going to go focus and watch the trade. Enjoy watching.
Guess what, guys? My psychology got the best part of me. Like, I feel so bad right now. I'm filled with regrets. So the gold trade that we analyzed together, I actually closed it before the market even started going my way. I closed it on loss. So let me explain how it happened. So after eating, I took my phone and I was observing the market, right? I was observing the candles since I had placed a sell limit already. But then the way at which the market started moving, because when we analyzed the market, it was moving slowly to my zone. Then all of a sudden, the candles forming were very, very strong. So I felt it was going to break my zone. And you know, normally as a trader, sometimes if you see that the market is likely to break past your zone, it is advised to close it. But some people would stay. If it hits their SL, fine. If it hits their TP, fine. But then one mind was telling me to close the trade, the other was telling me to leave the trade. If it hits SL, fine. If it hits TP, fine. And by the way, it's a demo account. But you know, it is advised we treat a demo account as our life account, because anything you practice on your demo is what you are likely to practice on your life account, right? So I listened to the voice telling me to close the trade, and I quickly closed the trade. Not up to 2 minutes after closing this trade, market started going my way. The market literally started going my way, and I started beating up myself. I was like, why did I close this trade? And guess what? I even closed it on loss. Not even like I closed it at my entry. I was on 1 point something dollar loss. On the normal, I was supposed to lose $4. It is a 1:5, so I was risking $4 to make $21, right? Then I closed the trade. So yeah, the trade is currently running. This is what it is currently running at. You see how it is massively going my way. Assuming I had trusted my analysis and held, I would have been smiling by now. And this is a habit I possess. This is not my first time doing this. It's not my second time. Once I see that the market is getting to my zone, I'll just run and go and close the trade. Most times after analyzing, I don't take trades. I take only a few, and those few I take most of the times end up hitting my SL, or end up hitting break even, right, and still go my way. Then most of the ones that I do not take are the ones that hit TP all the time. And all this thing put together is still psychology. Is my psychology messing with me? And I know that there are some people out there that might be going through this phase, or yet to go through this phase, or has passed through this phase. So please, you can drop a comment on how I can deal with this. But then I'm trying to make a promise to myself from this new week, because today is Friday. From this new week we're entering now, any trade I place, sell limits, buy limits, I'm leaving it that way. If it's TP, fine. If it's SL, fine. I'm not going to tamper with it, and I'll make sure I take every trade I analyze, because I miss out trade. Let's say if I analyze trade 100%, I take only 10%, and those 10% I take are the ones that do hit SL. Then the remaining 90 to 80% are the ones that go my way. And all these things put together is trying to play with my psychology. So I have promised myself that I'm going to work on that and work on my psychology by placing trades and leaving them until either it hits my TP or it hits my SL. So guys, I've come to the end of this video. I couldn't go to the gym again after it. I felt really heavy, and I don't like going to the gym after it. Like, the gym is the first place I go to in the morning after checking my chart when I wake up. I just go to the gym very early, I stay 2 hours, and I come back and continue my normal day routine, right? But then, since I couldn't make a video today about that, I'm going to make another vlog entirely for that, right? I'm going to be making more vlogs on those things. So thank you guys for watching. Hope you learned one or two from my mistake or from what I taught today. If there's any kind of video you'd like me to make, please drop that in the comment section. More videos like this will be coming up. Thank you guys for sticking with me and watching to this point. You are the real MVP. I really do appreciate you. Bye.
Yeah, it's finally hit my TP, my 1:5 RR. I decided to add this clip so you guys will see how the trade finally ended, though it's later reversed and hit my SL, but I would have been out of the trade by then.